Good morning, everybody. We are having some connection issues with Facebook and LinkedIn today, so we are only on YouTube and Twitter. We hope you can find us. Good morning. How are you today, Mark?
I'm good, thank you. How are you?
Wonderful.
Um, yeah, I don't know. Just going through the news here. Looks like all these Ivy League schools got to give money back.
So
Bunch of idiots, man. You
they
know,
should.
you know what they've done? They've totally ruined. Now, like 50 years ago, if someone said, "Oh, I went to Yale," you would think like, "Wow, this person's really smart. They got into Yale." Now it's like if someone's like, "Oh, I went to Yale," it's like, "So big deal,"
Oh,
you
yeah.
know.
You really had people pump that in your head?
I mean, it's true. It's like you went to Yale, okay, big deal. What did you study?
Well, I saw Charlemagne the God yesterday tell Joe Biden on his show that it was time to give everybody a Christmas gift and just walk away.
He should, and they're. You can tell that the tide is turning on him because of. Although maybe they just filed all these tax charges against Hunter so he could say, "Oh, I can't testify because I got this other case going on."
Probably. I like how they use that. These open investigation. Oh, that's an open investigation. We can't discuss that. They've been saying that since I was born.
He said, "I like how he's got. He's got 100 and just check just check this out before we look at the markets because I think this kind of struck out to me or stuck out. I always start my day with the New York Post. Got the best sports section. How about the Patriots, man? Winning
Did you
last
win
night.
last night?
Yeah, dude.
Nice,
They should have
nice.
put
See,
that kid Zappy in, you know, after the second or third game. But
yeah. When they brought
but
him in the other day,
yeah, they actually look pretty good, believe it or not.
that's good,
All
man.
right, so
That's
what do you
good.
think about this? He's got $188,960 on adult entertainment. But then he's got $683,000 for payment to various women. So I wonder what the difference is there. 1 point, dude, I can't even take out more than $700 a day on my ATM, and this guy took out
You know,
$1.64 million.
I don't
So,
understand how you can spend that kind of money on hookers. I just don't. I don't see the. I don't know. I mean, to me, the
well, you
challenge
know what?
of
He was probably so messed up
he didn't care.
that, or maybe the girl stole the money from him when he finally passed out after a 3 day
I
bender.
wonder how many times that bitch woke up
Um,
with no money.
all right. Anyway, um, all right. Let's talk about the markets. Well, let's look at the headline news, see if there's anything important going on here. So we got the jobs report. Oil bounces back. We kind of were looking for a bounce back on oil.
That's a Senator Kennedy or one of those Clay Higgins questions right there. So, Mr. Hunter Biden, how many times did you wake up and be completely broke after a night out smoking crack and playing with hookers? I would so ask that question if I was a congressman. Mark, you're on mute. There you
Okay.
go.
How's that?
Yeah.
All right. I think oil might go lower. Um, I mean, we've been looking at this. What level is this here? 6730, I guess you could say. So see how it was support? We tend to find support at prior support levels. Also, too, this is like the high 60s are important for oil because there's a lot of countries in the world where if oil is around 68, $69 a barrel, they can balance their economies, or balance their budgets. But if it's not, if it's below that, they can't. Like I think of the United Arab Emirates, they need oil to be like 68, $69 a barrel. So there's probably going to be a decent amount of support down here because there's a big incentive for these people to kind of keep the price higher. But I don't think they can do that forever. But in the short term, I think it's probably safe to think that we're going to get down here and we're going to get a bounce. And that's kind of what we were thinking on natural gas, too. And that is pretty much what happened. See, we got down to this price level that had been support before, and the low trade. Hold on 1 second. All right, so if we look at yesterday, the low trade was 249. So there you go, within 1 penny. And if you take a step back and you just think, how the hell is it possible that a market that's this big, trillions of dollars, worldwide market, so forth and so on, can find support at such a precise round level? And the answer is because there are people who are trading it. And when we look at support levels, we're looking at psychology, and this is the psychology of the people that are trading it. Now, let's suppose, all right, well, as far as I know, about 90 to 95% of commodities trading is just trading. It's not like long-term stuff. It's short-term trading, prop trading, day trading type things. But if you're a company and you need to lock in the price of, say, natural gas, you think that you own a company where you guys use natural gas to power whatever it is, right? So you like the price, you think it's low, you want to lock it in, so you go into the futures market. Now, what would that person do? Say they're an industrial manufacturer. Well, industrial manufacturers typically don't have trading desks. So they're going to have to go into a commodities broker and say, hey, go buy me these contracts of natural gas, right? We want to lock in the price. That order will eventually end up on the trading desk of that commodities brokerage firm. And the person who's trading it really has no idea what the client's thinking. And they really, they don't really need to know. They don't need to know why the client is buying it. Their job now is to just get the best price that they can. And the people that are trading it are people. So you're going to see these same emotions. So could have been yesterday, someone could be trading it and it's like, oh, okay, well, last time I got down to 250, there was support, so I'm going to jump in and buy it. So even though there might be this longer term things at play in the market, in the short term, the trading is really mostly just based on psychology. You can't get too into this thing here where it's like, all right, natural gas futures edge higher on storage draw. I mean, that's just a dumb headline because it implies that people are trading this because of the storage draw, whatever that is. Like people this implies like, there was a storage draw. Oh, okay, let's go out and buy. And that's just not how it works. I mean, if you look at this particular day here, what is so unusual about this day? Nothing. I would say this is actually even a boring day because look at very unvolatile or no volatility, right? But they got to throw up these headlines to make you think that, no one's going to read a headline that says, yeah, well, natural gas is just kind of not doing anything. But it's like, oh, edge higher on storage draw. If this news was relevant, then it's if this news was relevant, which it's not, obviously. I don't know. I don't think you would see these patterns. I don't think you would see something like natural gas lose 30% of its value in just a matter of like a month and a half.
I know, right? But I tell you what, as soon as it hit 249, it popped over 250 and it didn't go below it. It's not, and I think that's the floor for now.
Yeah, I mean, it looks like
Yeah.
it. So if this thing starts to rally, we can jump in on this UNG ETF, which is an ETF that tracks natural gas. It doesn't do it perfectly, but for our intents and purposes, it suits us. And if you're really bullish, you can look at the BOIL ETF, BOIL, which is designed to move in the same way as natural gas, but by twice as much. So if natural gas goes up by, say, 3%, this thing is going to be up by 6%. And if you're super bullish, I guess you could buy options on these things.
Yeah,
I presume the option.
you can buy options.
Yeah, the trade's 5 million shares a day, so it's probably a fairly liquid options market. Okay, so here's some things to watch. Well, we got the job numbers at
8:30.
8:30. All right, so we've been talking about this 410 level. I thought there was going to be some support here, and I guess you could argue there was for a few days, but then we just got right back into our downtrend. And a lot of times when we get to these levels that had been resistance before, see, this was resistance back here and over here. This comes here from our buyer's remorse, and it's really important to remember markets run into resistance at former peaks, and you can see that even here, like a trend within the trend. Mm-hmm. So we get up to a former peak, and there are people who bought here who are like, oh, I can finally get out of this garbage at break even. I bought it, it went down, but now it's back to my level, so I'm going to sell and get out at break even. So there tends to be resistance at former resistance levels because of that reason. It's psychology. It's not like magic or astrology. If you're approaching a level that was a peak, there's a good chance there's going to be resistance. And if you're going lower and you get to a level that was resistance, there's a good chance that there's going to be support because people that sold are trying to buy their positions back because they think that they made a mistake, and now they figure if I could buy my position back at the same price I sold it at, I can kind of erase the mistake in my head. Here that didn't happen, but now we're at this 410 level, former support level. If this thing starts to bounce, that's going to be pretty bearish for the market. Don't forget, we still got those extreme sentiment readings from AAII. All right, so let's see what the S&P has been doing. I guess on the positive side, the market's becoming less overbought. It's been consolidating. On the not positive side is the excessive sentiment and the possible reversal here in interest rates. But we can look at the SPY, sitting right in this range here. Again, you see, where did we run into resistance? Right around 460. Why did we run into resistance at 460? Is it because the market, some mystical force in the universe or the market gods dictated it? Or did we just run into a price level where there's going to be a lot of people who want to sell because they're remorseful buyers? And the answer is yes. We ran into resistance at a former resistance level. I mean, you can't really argue it because we're talking about like within a point on a $460 security.
You got a question here from Di Mark.
On the interest rates?
Yep, on the impact of the job numbers, yeah.
All right, well, let's think about this. If the job numbers show that let's see if I can get an estimate here. If the job numbers show that, it could be a case of good news is bad news, okay? Which is not an uncommon thing in the market.
The consensus is...
Because if the news is good, then the thought is, all right, the Fed's going to have to raise rates again because the economy's not slowing down. If the number is bad, then, okay, the Fed is not going to have to raise rates again because the economy is slowing on its own. So I think it's going to be one of those good news is bad news things. Or vice versa. Bad news could be good news.
The consensus is 180,000 jobs and the forecast is 160.
All right, so economists, the labor report, a hot job. This is like the new lingo, man, hot. It's like so annoying, man. These buzzwords just come in and out of vogue. A hot jobs report could undermine. The other thing now is they call it the print. It's a hot print. Print's a term that traders use to say when something actually trades, it gets printed on the tape. So it's a completely misuse of the word. But anyway, economists surveyed by Dow Jones expect the Labor Department to report that non-farm payrolls expanded by 190,000 last month, up from 150,000 in October. So if it's somewhat in line with this, it's probably not going to mean anything. If it's just some kind of like really off the charts, the estimates are terrible, like say jobs come in at like 300,000, then the market could probably interpret that as bad. If it comes in at 50,000, maybe we interpret that as good, but it's going to have to be pretty far off of the estimates for anything really significant to happen.
Well, and they adjust it every month anyway, 10 or 12,000 plus or minus usually.
Dude, I can like hardly hear you. I don't know if it's on my side or your
I
side.
think it's what we did with the to hear the teachable the other day. We'll have to go back through it after the thing to hear because I get an echo when I hear it this way. Sorry guys if that's annoying.
All right, so now we are going to look at our technology sector, and it looks like it's kind of flat. Been in this range for a while here. So markets trend higher when they're out of equilibrium, not enough supply to fill all the demand. Then when you get to a trading range, we could call this a rectangle pattern, but it's really just a trading range. It shows that the equilibrium is in balance here. The supply and the demand are kind of equalized. So now we're going sideways. So a rectangle pattern could be a reversal pattern because if something's going one way, it really, if it if something is out of equilibrium, it's going to trend higher or lower. And when we get to a trading range where it's unequal, it means it's in equilibrium. So this isn't going to stay here forever. It's going to break one way or the other sooner or later. I guess we might know a little bit better in a few minutes here. Because we were kind of thinking that maybe this Apple, the strength in Apple and Microsoft, could be a kind of a like a little bit of like a flight to safety, just like at the end of 21 when the market really started falling apart in November. But because of the way these indices are designed, the strength in these real big guys kind of covered the weakness in other places. And I can show you what I mean here. If we look at the Qs, so this is one of the reasons why we started to get bearish at the end of November of 21, right before the market peak. So here's the Qs where I think Apple and Microsoft together are probably 20 or 30% of this. So in theory, 90 of them stocks could be going down, and Apple and Microsoft could be going up, and the move in Apple and Microsoft might outweigh all the stocks that are moving down. So if you look at this, it's like, okay, well, where did this peak? In late December. So this is money flowing into those big guys. It's like the flight to safety. It's the top of the market. Maybe some people think, all right, we're about to go lower. Well, I don't know if people thought that, but for whatever reason, the money was flowing into there. It's like, all right, well, the market's getting weak. In the old days, the flight to safety was gold, but you know what? What's safer than Apple? If we look at the same indice where every stock has the equal weight as opposed to being weighted by market cap, look at where this one peaked. Oops. This peaked in late November. So this is a full month before the Qs peaked. And here, all of the stocks are equally weighted. So this shows you that most of the stocks started to go down in November. But because of the strength in Apple and Microsoft, the broader benchmark hid that. So that's one of the things you have to understand about these market-weighted indices. And it's not that it's wrong or anything like that. It's just you got to understand just the way they're constructed. And if you're in the big names, then that's great. But if you see like a divergence going on like it is here, you gotta pay attention. All right, so what's next? I guess our healthcare stocks. All right, so healthcare could be kind of see how what was a resistance level is becoming support or has become support.
Mm-hmm.
So this could set us up for another move higher. Things don't go up in straight lines, but I wouldn't be too eager to jump on anything in here. I'd be on the sidelines in healthcare because if those interest rates start to move higher, then this support will probably break and we'll get a move lower. In our financial sector, kind of just been going sideways. And this is pretty similar to the healthcare sector, right? It's like a level that was resistance could be converting into support. So generally, you could see that really good example right here. See how we got above the what was resistance and it turned into
Mm-hmm.
support. So markets don't go up in straight lines. This sets the stage for another move higher. So that could be going on here, but this stuff could all in generally this is bullish action. But I would say just because of the way the market is so focused on interest rates, that a move higher in interest rates could kind of trump the or outweigh the positive dynamics that we're seeing in healthcare and in financials. So this is another place where I would be on the sidelines. I mean, we're right in the middle of a range. Doesn't really look like it's going to move. It's pretty much unchanged in the pre-market. Remember, we looked at a lot of those quotes of great traders over the years, and there's a reoccurring theme that a lot of the really successful people have, and it's okay to be on the sidelines. You don't always need to be trading. You don't always need to be in the market. If you don't see anything that really sticks out at you, well, that's okay. Take the day off from trading. You don't want to force it. You could probably just be at, there's probably maybe 3 or 5 times a year where, like, if that's the only time you traded, you could be very successful. Like, for example, down here, you get this spike bottom down here. I mean, if you saw that, it's like, all right, well, now it's time for me to jump in. And you could be on the sidelines for months. But something like this comes along, you could still end up getting great performance. And where did this find support when it sold off? Right back here, where it was support back in May. So right around the 31.5 level. So market's going down, and you're thinking, oh, I'd really like to buy some of these financials. These things look good. I think the market's getting kind of oversold here, or undervalued, or whatever, however you want to look at it. Where should I buy? Well, instead of just guessing, say someone says, I like the financials. I'm going to buy if XLF gets down to 31. Well, that person just guessed. And in this case, they would have missed. If they looked at the chart, they would have said, oh, how about this? There was support around 31.5. I know that there tends to be support at former support levels because you have this dynamic of people selling at the support, and then the market goes higher, and a lot of the people say, I made a mistake. If he comes back to my price, I'm going to buy. So when you get all the way back down to the price months later, you get support at a former support level because of remorseful sellers. And the reason why you rally off of support is because some of the traders who want to buy notice the stock's not moving lower anymore, or the shares aren't moving lower anymore. So they say, there must be other buyers coming into the market. I better increase the price I'm willing to pay so I can get ahead of them. And then you start this bidding war, and this is why we rally off of support. So forget the news, forget whatever they're saying about earnings or price to sales ratios or EBITDAs. It's like, okay, there's support at a former support level because we know it's a psychological thing, seller's remorse, and we rally off of support because of a psychological thing. Buyers trying to outbid each other because they're afraid they're going to miss out. So you can see here, we got to support and we rally, right? Very, very common thing in markets. Some price levels are more important than others, and that's just how it is. Look at here. Consumer discretionary goes into this huge sell-off. Where does it find support? At a level that had been resistance, right? It didn't just turn here out of the blue, or it's not just a coincidence. It turned here because this is a level that had been resistance before, and we know that resistance can turn into support, again, because of seller's remorse. People sell and price goes higher, finally gets back to their price, they try to buy their shares back. See, if you look at this chart, you can really see that certain price levels are more important than others. For whatever reason, this 149.50 level is really important. For whatever reason, this 162.50 level is important. Why is 155 not important? It's like, I don't know. Why is 147 not important? I don't know. But for whatever reason, this particular market likes these particular price levels. Look at here. Market's running higher. Where did we hit resistance? A level that was resistance before. So market's moving higher. You're like, where should I sell? Oh, we're getting close to a former resistance level. Maybe I'll sell. What if someone said, I'll sell if we get to 180? Well, they're just guessing. You gotta let the market tell you what to do, and the market's saying, hey, there's a good chance there's going to be resistance around 175 because it was resistance before. All right, now we're going to go.
Now, this is so much seat time where you're actually looking at the charts and actually seeing the patterns happen in front of you. I mean, that's the beauty of day trading to me, is that the longer that I've learned this, I could actually take a step back from the market for a month and then come back and find a chart. And now I know what I'm looking at. That's the cool part about it.
Yeah, one of the main reasons why people blow up is because they overtrade. They feel like they always got to be in the market. They feel like if they make a mistake, they could try to trade their way out of it. And that's a trying to trade your way out of a mistake is like a recipe for disaster. I've seen it plenty of times. That's what brought Barron's Bank down with Nick Leeson. He was the compliance officer and the head trader. So you're supposed to have a compliance officer to oversee the head trader. So it was a little bit of a conflict of interest, but he made a mistake and he just tried to trade out of it and just got worse and worse and worse and worse. And finally, he put this bank that had been in business for hundreds of years out of business.
Wow.
All right. And now guess what he does? He consults with firms to make sure their traders aren't crooked. So, like, what did we know?
Rich.
That's rich. Yeah. Oh. All right. So here we have our industrial sector, and we can see here that we've run into resistance at a former peak. Still a little bit overbought though. If the market heads south, it's probably going to be some trading ideas within this sector. We can look at there's 11 sectors. And sometimes different ones are in the driver's seat. Now look at this here. 68.70 was clear resistance, really precise. And then it became support. Very clear. So we get to support, we rally off of the support. You don't need to be a chart guru to see that.
Nope.
I'm a former hedge fund trader. A lot of former hedge fund traders out there these days. I just think it's funny.
I just noticed you're $188,960 on a dollar entertainment this morning.
Hey man, that's I guess that's the lifestyles of the rich and infamous.
Rich indeed.
Here we have XLP, right? Support becomes support. Support becomes resistance. Support becomes resistance. So anyway, we're rallying, and where did we hit resistance? At a former support level. So by knowing where these important price levels are, it's like having a map to the market, because when we get to support or resistance, we tend to turn or break through. They tend not to go sideways for too long. It's like you're at a fork in the road, and it's going to go one way or the other. Now, if interest rates continue to go lower, utility stocks are probably going to continue to go higher. But if interest rates rally and this gets back below this support, there will probably be some ideas on the short side in here.
You got ABV and then AI and Palantir with Maru.
Sorry. BTBF?
No, that's Born to Be Free.
Oh. Well, let's see if there is a stock BTBF. No symbols.
Maybe once we go public.
AB. To me, this looks a little overextended. Where it's really overbought. I know there's the whole diet drug thing going on. But regardless, let's just look at the last couple times it was this overbought. So you see where the blue line is up to the red line here. This is what we call the RSI momentum indicator. And momentum is a measurement of how far something moves in a given period of time, like from time point A to time point B. It's not like the same as volatility. So the last time we were as overbought as we are now was like right there. So a little bit of a kind of a sell-off after that, or a consolidation period. And back here, I think the key to trading off these indicators is you don't want to trade the extreme. You want to trade the reversal. So when the blue line crosses back below the red line, that could be your trigger to get in. In this case, it would be on the short side. But to me, this looks a little bit overextended, but doesn't mean it can't go up more.
They forecast 160,000 jobs, and it was 199.
199. Yeah, so that's probably close enough that it's not really going to make that big of an impact.
The consensus was 180, but the forecast was 160.
Well, I don't really see anything moving, so I guess it's kind of a non-event. Let's just see if S&P is moving at all. All right, so the S&P is down a little bit from where it was before, but it's not a huge move. It's right back in the middle of this range here. So, yeah, okay, because that's kind of what we were expecting. If the number came in ahead of estimates, it's good for the economy, but it's bad for the market.
Yes.
But it's not significant. If those were blowout numbers, like just say it came in at $300,000 or $400,000, it was like, or 300,000 or 400,000 was like some kind of anomaly. This support would probably break, and we'd be in a pretty decent move lower here. But so you can see the reaction, but it's really such a small move; it might not even be tradable. So let's go back to Aviv. So overbought, approaching resistance. I would just keep an eye on this level here. And not surprisingly, this is, well, I was going to say it's 150, but it's really closer to 149. So there's a good overbought, getting close to resistance. It could kind of stall out here a little bit. So that's my thought on that. I think you're due for a little bit of profit taking there. Yeah, Palantir is trading above a big gap. And as traders, we like that, or that gets our attention because the old saying that gaps refill is true. And it's due to like a psychological thing. If you understand charts or psychology, it's easy to understand why. We saw before that one of the main reasons why you get support is because you have remorseful sellers trying to buy things back. Well, if you gap through these levels, meaning we close here, and then the next day we open here, there was no trading in here, or very little maybe in the pre-market, but let's just say there was no trading in here. So now we get back into these levels, and you don't have these remorseful sellers trying to buy their shares back. So the sellers are going to have trouble finding buyers, and as a result, they have to push the price lower to get the buyers off of the sidelines. You can see right here, we get the gap up, and then when we reverse and we rip right back through those prices. It's a very common thing in markets, and as traders, it's a good thing to know because it helps us decide, is this reversal worth trading, or in a situation like this, where you move up to this resistance level, which I don't know why I have this marked here. It doesn't look very clear on this. I probably just marked this top here. I probably just put this
that
here.
That was where they de-SPAC'd as well, $10.
Yeah, so we can see resistance, it's resistance. But all else being equal, if you want to play a reversal off a support or a resistance level, something that moves to that level really, really quickly, if it is going to rebound or reverse, there's a good chance it rebounds or reverses really quickly back through them. Like, if it's something that goes slowly up to support or resistance, you could reverse, but the reverse will probably be slow. We get up here, and then for whatever reason, the sellers come out of the woodwork. They have a hard time finding buyers. So they have to offer their shares out at a discount. They may come into the market and say, hey, I got 1 million shares to go at 9. And someone might say, well, you know what? I'll pay you 8.90 for them. So they have to offer their shares out at a discount to get the buyers off of the sidelines. And then sometimes we get into these ranges, like here, and you have the same dynamics of the buyer's remorse and the seller's remorse, but because you spend more time at these levels, there's just more vested interest develops in them. So markets blow through levels they don't like, and markets hang out around levels that they do like.
Yeah, look at TNX, Mark.
Wow, that's a pretty
Substantial.
That's a big move. So why would the let me just think about this here.
Hot jobs makes them think they have to raise interest rates again. And all it is these illegals that they're giving jobs to across the border.
Well, like I said, I think that this will end up being bearish for stocks. Maybe it hasn't really sunk in yet, but notice where we made this reversal, right off of a level that was support before. So we tend to find support at former support levels. We tend to rally off of support. We get support at former support levels because we have people who sold who are trying to buy back over here. We rally because these anxious buyers start cutting ahead of each other. All right? Very common characteristic. And the reason why we see this in various charts of whether it's a stock or whether it's a commodity, it's because the chart shows human psychology. And it's humans that are doing the trading. Whether it's a commodity, whether it's a crypto, bonds, whatever. We're seeing the psychological, we're looking at psychology. And another thing that's really cool is if you look at charts of different time frames, you can see the same patterns. And this is what I call the fractal nature of trading or of technical analysis. If you see well, I guess we could maybe kind of find a stock. I'm just going to pick B. Barnes Group. All right, so let's see what we
and
can
it's
see
in a
here.
gap. Look at that.
Yeah.
And at
All right, so
good.
What's
And
that?
at a level.
Yeah, yeah, so right there. All right, I want to find a stock that I haven't really looked at before. Well, BB BlackBerry. It's been a while since we looked at that. All right, now just take a look at this. Right, you see these clear market principles. So we get support at former support levels, okay, because of seller's remorse. We get resistance at former resistance levels because of buyer's remorse. So pretty clear as to see. This is a 1-year chart. Now if we go to the day chart, just yesterday, well, this is kind of hard to see. I'm going to go with the line chart to make it easier. Look at what happened. Where did we find resistance? At a former resistance level. See, resistance becomes resistance. So here we're seeing buyer's remorse of the short-term trader. This is the psychology of maybe your day traders. If we look here, we see the psychology of longer-term traders. Resistance at a former resistance level. So if you understand charting or if you view it through this prism of what does this tell us about psychology, it's pretty easy to understand why this stuff happens. These are the emotions of, I guess, maybe your swing traders or people that trade for a few months. What we just saw on the day chart was the psychology of the short-term traders. So we're looking at the same psychology, but it's of people that trade with different time horizons. Whether you're a long-term buy and hold investor or a day trader, you're going to experience the same emotions of remorse and so forth and so on. Look at this CVS chart. These guys are in the news a lot these days. I mean, look at how long some of these price levels stay intact. 83 was resistance for 2 years. 111 was resistance back in July and August of 15. Then it turned into resistance over here. That's what you call market memory. That refers to. Uh, oh, you're welcome, Ty. Yeah, that refers to. What was I just going to say? Now I completely forgot.
You were talking about market memory.
Oh yeah, market memory. That is, like I could use a little bit better memory. That refers to the concept of how one of these, a price level that's important, can retain its importance for a long time, sometimes longer than you would think. And as we can see here, it could be years. So CVS rallies, and in my opinion, it's not a coincidence that it turned right around 111. 111 was a peak back in 2015. So market memory. Remember, we're looking at a chart here that's about 9 years.
That's crazy.
Yeah, through the way a lot of people think this stuff shouldn't happen. Like when I was in business school, they taught us this stupid thing called efficient market theory, and it's dumb because markets are not efficient. If they are, we wouldn't we wouldn't be sitting here right now. If markets were efficient, and you believe efficient market theory or hypothesis, explain why a support level exists. And you can't, because if the market was really efficient, every price level would have the same amount of importance. There would be no such thing as support or resistance. But obviously, when we look at a chart, we can see that it exists.
Hey guys, we've been doing some organization on the YouTube channel so the videos are easier to find. You'll now find the live streams are all set by date in its own playlist, and we're going to put the historical newsletters in their own playlist and break things down a little bit so it's a little easier to find.
Yeah, we got to get up to a thousand followers so we can start making some money. Apparently, I don't know how it works, but
And I guess they just want you to work for free forever.
it's that stuff is so manipulated. You know what goes on. Sometimes I'll post a video and I'll get a like before I even get a view.
I know, it's wild.
You know? Yeah. All right. Well, I guess if no one else has any questions, let's just take a final look at SPY. My guess, with the interest rates moving higher, that's going to pressure the market. Maybe not today, but I don't know. I have a hard time seeing us make a significant move higher with the sentiment being as bullish as it is, and now with interest rates making a pretty decent move higher. So
you're bearish?
I would be. I mean, I would probably be on the sidelines right now.
Damn, I got a bear graphic for you. I'm gonna throw it up real quick.
I wouldn't say that's pretty good, dude. I wouldn't say I'm bearish, but if the market's going to go lower, the signs will be pretty clear. Because, well, first of all, the S&P, you got this really well-defined support around 454, right? And we're at 458 in the pre-market. But if this starts to break away, we got the gap underneath it, the fast move. And where are you going to get your signal that that's about to happen? I think you're going to get a good signal here. This is what will happen if the market starts to give away. Different sectors drive the market at different times, or in control at different times. And sometimes you can get really good insight into what the market's going to do by watching these various sectors. Sometimes the financials drive the market. Sometimes it's technology. Sometimes it's healthcare. Sometimes it's a couple of them. The easiest way to explain it, and this will probably never happen in real life, but just pretend that the S&P is moving ahead, but 10 sectors are flat, and it's one sector that's moving up. So that makes the S&P move up. Well, if that one sector gets to resistance and it's overbought, there's a good chance the entire market is going to reverse because that sector is in charge. So the 3550 level on XLF, that's the third biggest sector, is clearly defined. Healthcare, the 131 level is clearly defined. So you got two clearly defined price levels in the second and third biggest sector in the market that are support is being tested. So if that support starts to give way, that'll spread through to the broader markets.
Excellent.
All right, I guess we could take some questions.
Anybody have anything you wanted to look at this morning?
Let's just see what's going on over here. Investors panic. I don't see anyone panicking.
No, I'm kind of calm today.
Inflation falls farther. This guy at J.P. Morgan has always been a bear. These guys have to put out an opinion. You can't just come to work and say, "Hey, I don't know," because they're selling this research. So you got to come up with something. So these guys are under a lot of pressure. It's not a job I would want because you got to force your ideas sometimes. And these are the broker dealers. Now, if you're on the buy side, like at a mutual fund or hedge fund or a pension plan, you're not forced to sell ideas. You make the investment decision. So they can be more, I guess, honest. Like if J.P. Morgan has a big investment banking client, I don't know, I guess we're looking at healthcare. So say UNH is a big investment banking client of J.P. Morgan. They're not going to come out and say, UNH sucks, you should short it. Because the next time UNH needs to get some investment banking business done, they're going to say, what? JP Morgan has a sell on our stock? Screw those guys. I'm not going to give them any business. Now, if you're on the buy side, which is the side that the investors are on, the people that pay the commissions to get trades done, you don't have to worry about those same things. And what's pretty funny is sometimes when these companies do their conference calls, when they have their earnings, the vast majority of the questions they get are these total layups because it's the brokers that are calling, that are trying to get through. All right. So they have a bad quarter, the stock's down 10%. It's like, oh, hey guys, you guys are really handling this well. I'm glad that your margins are doing this and this, that, and the other thing, and blah, 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 blah. Now, what's pretty funny is every now and then, this operator or the screener will accidentally let through like a money manager who just lost a lot of money on that stock. And they're going to be like, they can get pretty nasty and pretty contentious, but it is pretty amusing. Because if you're a money manager and you own this stock and it went down, you're going to be upset because you're investing on behalf of your clients. And now you got to call your clients and tell them, hey, I bought this stock that's not doing very well. So it's kind of amusing. They have these people that screen the calls. And every now and then, it doesn't happen a lot, but every now and then someone gets through it.
Order flow.
It's pretty funny.
Mark, order flow trader would like you to look at BTC and Bitto.
Okay. All right, so again, before we look at our current place, just want to point out, see, we got resistance became support. You got resistance here, became resistance over here. And again, we're looking at psychology, but now we're not looking at the psychology of people that are trading stocks. We're looking at the psychology of people that are trading Bitcoin. Now, to me, this looks very overbought. This looks very overbought, and it is getting kind of close to a level that was resistance. So my guess is you probably get some kind of a reversal here pretty soon. I don't know if it's going to be huge, but anytime a market makes a move of this magnitude, there's going to be people that want to take profits. And as we can see, we got up here, and we've basically been going sideways for the last 3 days. So a potential idea here to know whether to get in on the short side or to sell is when the RSI gets back below the red line. In other words, when we go from overbought conditions back to neutral, that could be the first sign that we're about to head lower. Because it's like if you're driving a car at 50 miles an hour, you can't just reverse. You got to slow down and come to a stop and then
Mm-hmm.
reverse. So that could be going on here. Now, if we do move ahead, I would be looking for resistance up around here, 47.5, just for no other reason than it was a former peak. But it looks like we're a little sideways. So let's take a look at the 5-day chart. So this is 5 days. So we're really, over the last couple of days, just been kind of going sideways. So I would say short term, if we, yeah, so short term, I think your support is at 42, I guess 40, I would say like 42,950 has been the support. So if we start to come down, so if I own this, I would stay in it. But if this support started to give way, that's when I would probably sell and maybe try to do something on the short side, because just because it's overextended, there's a good chance that there's just going to be a reversion. There's a lot of trading strategies are based on this concept of reversion to the mean. So let's see. So what's BITO? ProShare. So this is going to follow Bitcoin, but it has leverage, so it's going to move probably about twice as much. So I think if you're trading this, you should really. Is this like an? Oh, wait a second here. So if you're trading this, you should really just be watching Bitcoin. This is what we call a derivative. It's a security that bases its value on something else. And this could get you a little confused because Bitcoin trades 24/7, and this trades only during market hours, 9:30 to 4. So because of that, you see all these gaps. And this is not a gap in your typical sense. This is your gap because it closed here, and then overnight Bitcoin moved up to here. So I think if you're trading this, you should watch Bitcoin, and then the same things apply. You just got to remember that this is going to, whatever direction Bitcoin moves in, this is going to move the same way, but by about twice as much.
And then we got a question on XLE from Ahmed.
Okay. I think the whole Bitcoin thing is really founded upon a myth. Well, I mean, if you go back to when it first heated up and first became popular, the whole thing was well, the government can't regulate it, and then when we don't have regulation, what happens? We get things like FTC or FTX. And now the guy from the Binance, right? Didn't he just plead guilty?
Yeah.
So in order to have markets, you have to have confidence. And in order to have confidence, you have to have some kind of regulation. So a bunch of the big reforms that were done in the 30s and the big deal were changing a lot of the rules on Wall Street. Like after that, before the New Deal, like say the 1920s or the 1910s, companies didn't have to put out earnings statements. Now that's a law. They have to put them out, I think, at least once a year. The convention is once a quarter. But that made the markets safer and people were more confident. So one is the lack of regulation is a bad thing. And two is you can't buy, I'm not going to buy this like the government's not going to tax it, because the government will tax anything that they can make money
And
on.
everything.
Yes. They're even talking about a rainfall tax up here. Like, if I swear, like if they're going to judge how much you got to pay for the rain depending on how big your property is. I mean, I hope it doesn't go anywhere. XLE, I don't think it's time to buy this here. It looks to me like it's still kind of trending lower.
This whole carbon capture, like the pipeline they're trying to run through. What is a carbon capture pipeline, Mark?
I'm not sure what a carbon capture pipeline is, but the whole idea behind the carbon market is if you say you pollute, right? You have to pay something. You have to go to the exchange and buy something that lets you that lets you do that, right? Maybe pollute isn't the right word, but if you want to release X amount of pounds of whatever, you got to go to the exchange and buy these certain things. Now, if you do something that saves energy, you get awarded the credits. This is the easiest way I can explain it. And I know, like, I'll give you a good example. There was some like tribe in Africa that was they were just creating a lot of pollution with the way they cooked and everything. So then one company went in there and gave them all these like stoves and things that didn't like create that much pollution. So they were like awarded credits because they're taking actions that are going to be beneficial. But I don't know if it's these ideas have been around for a long time, and I don't know if it's going to work or not. But anyway, that's the essence of this. But in terms of what is a carbon pipeline, that I don't know.
That's the one.
All right, everyone, I'm going to hit the road. I hope you all have a nice weekend.
Thank you, guys.
And yeah, we'll see you on Monday.
Have a great day, guys. Enjoy.